Hey, what's up everyone? Welcome to the first video on the channel. My name's Cole and my goal is to help you take control of your finances and give you the confidence you need to succeed in the stock market. Today's video is about how to invest your first $1,000 and I'm excited to have you here, so let's get started. I want to start this video by telling you a little bit about my story and investing journey. Growing up, I had an interest in business and I had a general sense of direction of where I wanted to go with my life. I started investing about 4 years ago at the age of 18, opening up a TFSA and a brokerage account and investing my first $1,000, which we'll talk about how to do later in this video. I quickly realized I had a passion for finance and investing. And I spent the last few years reading every book and article I can find, watching hundreds of hours of videos, and overall just learning as much as I could. I'm also studying business and accounting at university. Now this can seem overwhelming to a lot of people, but I promise you, it's easier to start investing now than ever before. And I just want to share this with as many people as possible. You might be wondering, why should I start investing? Well, there are a few reasons. One is building wealth. By investing, you're allowing your money to work for you by growing over the long term. By investing properly, you can compound your money significantly greater than whatever a savings account can offer you. Another important reason to invest is inflation. Inflation simply eats away at the purchasing power of your money. And we saw inflation as high as 10% this year. So by investing in assets such as stocks, bonds, and ETFs, you can preserve your wealth and outpace inflation with growth. Lastly, I'm going to mention achieving financial freedom, which removes this financial stress out of your life. Maybe you can do things such as retire early or live the life you've always dreamed of because you've allowed your wealth to compound over time for you. So you have the money set aside or you want to start investing on a weekly or monthly basis. You've determined your investing goals such as early retirement, saving for a home, long-term wealth preservation or growth. So how do you start? You're going to need to open a brokerage account, which is similar to a bank account except it allows you to hold a variety of investments such as stocks, bonds, ETFs, not just cash. Now there are plenty of options for this. TD offers TD Direct Investing. That's for Canadians. I prefer using a third-party platform such as WealthSimple or Questrade. Now, if you're American, you won't have access to these. You can use something like TD Ameritrade, which I know they have. And they also have third-party platforms such as Robinhood or Fidelity, which I heard are very good. My personal favorite I've been using for years is WealthSimple. Due to its commission-free trades, user-friendly and innovative platform, you can download the app and sign up within minutes. You can use my referral code, which I'll link in the video, for a sign-up bonus between $5,000 and $3,000. Next, you're going to need to select an investment account. Now, for example, in Canada, we have the TFSA, the tax-free savings account, and the RRSP, which is the Registered Retirement Savings Plans. Now, while these are both great accounts, I recommend the beginner investor looking at the tax-free savings account first because it offers more flexibility when it comes to withdrawals, along with tax-free growth. Now, if you're in the States, you're only going to have access to your accounts, which would be the comparables of the 401k and the Roth IRA. Now, you need to know what to hold specifically, but this is going to depend on your financial goals, your risk tolerance, and your time horizon, which you're going to need to assess for yourself. Now, I can provide some general insight on what to look for. If you don't need the money in less than 10 years and you're looking for more growth, then you might want to lean towards stocks, which have historically returned 10% a year, whereas bonds only 4 to 5% a year. However, with bonds, you are going to experience less volatility than with stocks. Volatility is just a fancy word for price fluctuations, movements up and down in your portfolio. Some years the stock market's going to be down 20 to 30% and your portfolio will reflect this. However, other years it's going to be up 20 to 30%. Now with bonds, you're not going to see this much volatility, but you're going to yield a lot less return. Now, if you're a beginner investor, I want you to look into ETFs or exchange traded funds, which are similar to mutual funds in the sense they're a basket of many stocks and bonds. Now, many investors tend to prefer ETFs over mutual funds because of the management fees. Mutual funds typically charge 1 to 2% just to hold them. And over time, this 1 to 2% eat away at your gains and could cost you hundreds of thousands of dollars by the time you want to retire. Another benefit of ETFs for beginner investors is they allow you to easily diversify your portfolio. Basically not having all your eggs in one basket, instead ETFs allow you to spread your money across the market, reducing your overall risk. It's a lot easier to buy an S&P 500 index fund and own the largest 500 companies in the United States than having to buy all those stocks individually. That's all for today's video. Thank you for watching. If you're interested in joining the Canadian Investor Group Chat, I'll leave the link below. And if you found this video helpful, make sure to leave a like and subscribe to support the channel.